Hello everyone, I am Ms. AP200 and I am a wholesale and retail lecturer at Gert Sibande TVET College, the Standerton campus. Today I am going to be delivering a level 2 wholesale and retail lesson, particularly focusing on module 3, which looks at the factors impacting on the bottom line of a wholesale and retail business. At the end of this lesson, you as a wholesale and retail level 2 student will be able to best explain the following. Firstly, you'll be able to explain the importance of profit for the survival of a wholesale and retail outlet. Secondly, you'll be able to explain the terms bottom line and top line as they are used within the wholesale and retail industry. Thirdly, you'll be able to explain how each of the entries on a basic income statement impacts the bottom line of a wholesale and retail outlet. Fourthly, you'll be able to explain the concepts shrinkage as well as losses. And finally, you will be best able to explain how shrinkage affects the organization as well as its employees. The importance of profit for a wholesale and retail outlet. So the main purpose of each and every business is to make a profit. Profit is basically what is left after the costs have been deducted from the income that the business makes. So what this basically means is that the business makes enough money to pay everyone who is involved in the business, and that there is still enough money left over to reward owners to share the profits amongst them. So the owners of a business can decide to either reinvest the profits back into the business, use it to invest in other business ventures, or rather spend the money on themselves. But what is important to note is that without a profit, a business cannot grow. If it cannot grow, it means it cannot be sustainable in the long run. Therefore, it would need to close down its doors. That's why it's important for a business to run and operate in a manner that will generate sufficient profit for the business to be sustainable. The top line and bottom line. So we're going to look at the difference between top line as well as the bottom line. Top line basically refers to sales or the turnover that the business makes. And bottom line refers to the net profit of a business. So basically, when the owner of a business asks, what is the bottom line? He or she is interested in knowing how much money is actually left over after all the expenses for the business, including tax, have been paid, so that he or she can know how much money is left to be reinvested into the business or to be used by the owners of the business. So for now, we are going to look at the basic income statement impacting on outlets within the wholesale and retail industry. The income statement is basically used to measure how healthy a company is in terms of the profit or loss that company or branch makes. So also with that, we are also going to look at the different entries that are included in the income statement of a business. The first one that we are going to look at is turnover or sales in outlets. So when we are speaking about the sales that the business makes, this is the amount of money that retail businesses receive when they sell their products or they render their services to customers. So this is basically how they get money to flow into the business. So it's important for the business to make sure that this information is recorded as accurately as possible. So for instance, if you are selling chocolates, when you sell your chocolates to customers, what you receive from your customer when you sell that chocolate is what we classify as sales. Secondly, cost of goods sold, which is also classified as cost of sales. So when we are speaking about sales, cost of sales, we are referring to the money that the business spends to get the product or service ready to be able to sell to its customers. So it is the money that you would have to pay to your suppliers for the stock that they sell to you. I'm going to use the same example again. If you are selling chocolates, for instance, when you go to your supplier to buy the chocolates to make it available to sell to your customers, the amount of money that you will pay the supplier for you to get those chocolates is what we refer to as the cost of sales. Thirdly, we are going to look at gross profit. Gross profit is basically the amount of money that is left over after you have paid for the goods that you have sold. What's also important to note is that gross profit is not the final profit of a business, because from that profit, the business still needs to pay for its expenses. And then there is a formula that we use to work out gross profit, which is sales minus cost of sales. Fourthly, we are going to look at other income. So when we are speaking about other income, we are referring to the additional income that the business makes. What's important to note is that this is not the income that is generated from the main operations of the business. It is just other extra additional income that the business makes from rendering extra services to certain customers or even businesses. The other component that we are going to look at now is operating expenses. Operating expenses basically refers to the costs that are involved in the running of a business. And operating expenses are classified into two categories. The first one is fixed expense, which means that the same amount of money has to be spent every month by the business. And the second one is variable or flexible expense, which means that the cost that the business spends every month changes on a monthly basis from one month to the next. The next entry that we are going to look at is net profit before interest. So with net profit before interest, this is the amount that is calculated by taking the gross profit, adding any additional income, and deducting the expenses of the business. This is what tells the manager or the owner of the business whether the business has made a profit, whether the business has made a net profit or a net loss. And remember, a business will make a net profit when its gross profit exceeds its expenses. And then a business will make a net loss in an instance where the expenses of the business exceeds the profit that the business made from the sales. And then, so now we are going to look at the other entries on the income statement. There are also other entries on the income statement. However, in large businesses, this information is dealt with at the head office of the business. While the store simply does what? Whilst the store simply deals with the income statement up until the net profit before interest part. So the other entries include the following: interest, net profit before tax, taxation, net profit after tax, dividends, as well as retained income. Let's look at the first one, interest. Interest. So when we are speaking about interest, we are referring to the amount of money that is earned by the business from the bank in an instance where the business invests its money with the bank for a certain period of time. And also, it is the amount of money that is paid by the business to the bank in an instance where the business borrows money from the bank, like for instance, when a business takes up a loan with the bank. So in an instance where the interest is earned by the business from the bank, it basically means that it's going to have a positive effect on the profit of the business. The reason for that is because obviously in an instance where there is money that is earned by the business, it means that is cash flowing into the business. But when it's an instance where the business has to pay the interest to the bank, it will obviously have a negative impact on the profits of the business because it will reduce the profits as that is money flowing out of the business. Net profit before tax. So when we are speaking about net profit before tax, we are referring to the net profit of the business before tax is deducted by SARS. Then, taxation. Taxation, this is the main source of revenue for the government, and businesses should pay tax to allow the government to provide public services. Obviously, when we are speaking about tax, that is money flowing out of the business. So it will also decrease what? It will also decrease the profit of the business. Next, net profit after tax. So when we are speaking about net profit after tax, we are referring to the final profit of the business after deductions have been made. But that is obviously before the deductions of the dividends have been made. And then dividends. When we are speaking about dividends, this is the amount of money that is paid to the shareholders of the business by the business. And obviously, same concept as well. With dividends as well, it will decrease the profits of the business because it's money flowing out of the business. And lastly, retained income. When we are speaking about retained income, we are referring to the amount of money that the business has left over after it has paid dividends to its shareholders. So now that we've looked at every entry that is included in the basic income statement of the business, and we now know what it means and how it affects the businesses within the wholesale and retail industry. So what I'd like us to do now is to complete the basic income statement practically together. So we are going to complete the basic income statement based on the information that is provided. So the following information is provided for ABC trading. Sales. The amount of sales that this business has made is 100,000. Cost of sales is 75,000. Other income is 5,000. Expenses amount to 20,000. Interest is 5,000. And it's important to note and check if that 5,000 has a negative, it means that now there was the amount of interest that was paid by the business to the bank. So it is an outflow of cash to the business. And then taxation, it's 1,900, and the dividends of the business, it's 1,240. So it's sales, 100,000. Cost of sales is 75,000, which we indicate with what? Either a negative sign or brackets. That is just to indicate that that is money flowing out of the business. 75,000. Then let's calculate. So the sales, it's 100,000. You subtract 75,000, which is the cost of sales. And the gross profit, it gives us a total amount of 25,000. So the business, so ABC Trading also made what? It also made an additional source of income, other income of 5,000 Rand. And then it reflects there that the expenses of the business totaled to 20,000. Expenses, I repeat again, since it's money flowing out of the business, you indicate with brackets. So now, we now know that the business made a gross profit of 25,000, as well as other income of 5,000. So we say 25,000 of the gross profit. We add 5,000 for other income. And then we must deduct the expenses of the business, which amounts to 20,000. So the net profit before interest that the business has made totals to 10,000. We can also see that the business has an interest of 5,000. Which is indicated with what? Which is indicated with a negative sign, reflecting that there was money that went out of the business. We will use brackets to indicate that as well. So from that 10,000, we do what now? We subtract the 5,000 of the interest that the business paid to the bank, which gives us the net profit before tax of 5,000 Rand. And then the business paid 1,900 Rand for tax, which will also indicate using brackets, since it's money flowing out of the business. And then we will subtract this taxation from the net profit before tax. So it's 5,000 minus 1,900, which gives us a total amount of 3,100. And then the business paid out a dividend of 1,240 to its shareholders, which we are going to do what now? Which we are going to deduct from the net profit after tax. So it's 3,100 minus 1,240 dividends, also indicate with brackets. It gives us a total retained income of 1,860. That was basically how we go on about completing the basic income statement. What's important to note with the basic income statement, obviously for you to be in a position to best calculate each and every one of these entries that are indicated or that are indicated in bold, you obviously need to know the formulas that you must use for that. For gross profit, we did say that it's sales minus cost of sales. And then for interest before tax, we know that you take the gross profit, you add other income, that's if the business made an additional income for the course of that month or during that financial period. And then you must subtract the expenses of the business. And for you to determine the net profit before tax, you do what? You subtract the interest from the net profit before interest. And then for you to determine net profit after tax, you subtract what? You subtract taxation from the net profit before tax. And finally, for you to determine the retained income of the business, which is the final income that the business has made after it has paid dividends to its shareholders, you say net profit after tax, and then you subtract dividends, it will give you the retained income of the business. Next, for the last part of the lesson, we are basically going to look at how shrinkage affects the organization as well as its employees. But firstly, before we look at how shrinkage affects the organization as well as its employees, let's look at the definition of shrinkage. So this is where we are going to best define what precisely shrinkage is. So when we are speaking about a shrinkage, we are referring to the loss or decrease of cash or merchandise in the business through either a breakage, employee theft, shoplifting, paperwork errors, or even supplier fraud. Then, so with how shrinkage affects the organization, we are firstly going to look at the effect of shrinkage on the profits of the organization, and then finally, we are going to look at the effect of shrinkage on employees of an organization. Firstly, we are going to look at the effect of shrinkage on the profits of the organization. Remember that a shrinkage is basically a loss to the business. And one thing that is important to take note of is the fact that irrespective of whether a business makes a profit or not, it still needs to pay its fixed expenses. And if there's a shrinkage that the business is experiencing, it will basically reduce the profits of the business. And when the profits of the business are reduced, it will end up getting to a point where the business has more expenses than their profit. And also, when a business experiences a shrinkage, when it reduces the profits of the business, it will also have an effect on what? It will also have an effect on the dividends that the business has to pay to its shareholders. Obviously, if profits are reduced, it means that the amount of money that is paid to shareholders will also be reduced. It will also have an impact on what? It will also have an impact on reducing the dividends that are paid to shareholders of the business. Remember, the main aim of shareholders, when they invest money into the business, they expect to receive reasonable returns. And in an instance where they do not receive reasonable returns, they might end up getting to an instance where they change their minds about putting their money into the business that is not profitable. And in an instance where shareholders stop investing their money into the business because it's not profitable, it means that the business will have less money to spend on improving equipment that is used in the business. It will have less money available to spend on team building activities, and also it will have less money to reinvest into the business as well. Secondly, the effect of shrinkage on employees of an organization. So in an instance where a business experiences a shrinkage, It affects the entire organization as a whole, including the individuals who are working for the business. Obviously, we did mention that when a business experiences a shrinkage, it means that now there are going to be reduced profits in the business. And when profits are reduced in the business, it also means that the business is going to have a less ability to pay competitive salaries. It means that the business is also going to have less ability to pay expenses within the business. And the salaries of the employees also, the salaries of employees are included in the expenses that the business needs to cover from one month to the other. So, how will a shrinkage affect the employees of an organization? A shrinkage will affect the employees of the organization in the following 3 ways. Firstly, jobs will definitely be affected. There's going to be a retrenchment of casual staff members as well as other staff members who were recently employed. That is, of course, to save costs in the business. Secondly, overtime opportunities for employees to earn extra money will fall away. Obviously, if a business is in a position where they cannot merely even pay salaries of employees, they certainly won't be in a position to pay overtime for the employees. And then lastly, if the business pays bonuses based on company performance, this is also going to fall away. Remember, in an instance where the business pays bonuses based on company performance, it means that now they pay bonuses based on the amount of profits that the business makes. During today's lesson, we looked at 5 things. Firstly, we looked at the importance of what? We looked at the importance of profits for the survival of businesses within the wholesale and retail industry. That's where we said it's important for a business to do what? It's important for a business to make enough profits to grow and be sustainable. Because without enough profit, the business is not going to have sufficient money to reinvest into the business, invest into other business ventures, or to even reward the owners of that particular business. Secondly, we looked at the terms top line and bottom line. That's where we said that top line refers to what? It refers to the sales or turnover that the business makes. And bottom line refers to the net profit of the business. Thirdly, we looked at what? We looked at the entries of the basic income statement. That's where we touched on elements such as sales, which is the amount of money that you receive when you sell your goods to the customers. That's where we also looked at cost of sales, which is the amount of money that you pay to your suppliers to have your product or service ready available to sell to customers. Also with that as well, remember, for you to be able to sell a product to customers, it needs to first be available. That's where your supplier comes in. We also looked at the gross profit of the business. We also looked at other income, amongst other factors. We also looked at the different net profits that the business makes. Net profit before tax, net profit after tax. We also looked at the retained income. We also looked at dividends, which is the amount of money that is paid to the shareholders of the business. What we also looked at, we also completed the basic income statement together, and also lastly, we looked at how shrinkage affects the employees of the organization as well as the profits of the business. Thank you very much for watching. Goodbye.